Okay, we're going to get started. Good afternoon and welcome to today's webinar, Provider Relief Funds, Reporting on Funds You Received and Applying for More. My name is Stacy Tarpley and I will serve as your Zoom host today. I hope most of you are familiar with Zoom and our webinars, but if not, just a few reminders. Everyone is muted. This is not for CPE, but we still hope that you find the information we provide valuable. If you would like to ask questions, please feel free to use the Q&A function located on your menu bar. We have also turned on upvote if you would like to use this function as well. To hide the transcript or closed caption, please click the live transcript or CC icon on your menu bar, then click hide transcript. If you don't see the hide option, chances are you've joined us before and have already hidden the transcript too, so you are all set. Finally, we will include a PDF copy of today's PowerPoint in your follow-up email. Should you have any troubles, please let us know and we will do our best to troubleshoot. With all of that, I will now turn it over to the presenters to get started.
Excellent. Thank you, Stacy, and welcome everybody. We're excited once again to talk about our favorite topic, the Provider Relief Funds. As we get started, quick introductions. I am Tyler Bernier. I am a partner out of our Oklahoma City office. And really, this has been my second job here since about April 10th of last year. Thought it was going to be a short-lived endeavor, and now I'm looking out and I'm like, we're looking at like 2024 at this point. So
you need to stop saying that. You need to just stop reminding us.
And with me, I have Ashley.
Hello, I'm Ashley Brand-Judah, partner in the Fargo office, excuse me. Similar to Tyler, primarily focus my time in our assurance practice, but have of course focused on the Provider Relief Fund since April of 2020. So glad to be back. It's been a while since we've done a webinar, but we've been deep in the trenches of provider relief and working through reporting and all of those fun things. So happy to be here today and talk through some updates on the new funding and just some of the reporting lessons that we've learned along the way.
Absolutely agree. So before I kick it off, a quick story. A couple of days ago, and this actually did happen, I was in my backyard on the patio grilling and playing catch with my son. He's on a flag football team, so we are practicing throwing and catching. And so catch seems like it's pretty simple, right? It's literally like throw, and then he catches it and he throws, and maybe there's a couple of pointers in between. We got about one throw in before he decided, I don't want to do that. We're going to do the one where you start really close together, and every time you catch it, you move farther apart. Every time you drop it, you move closer together. So we started doing that for about 3 or 4 throws until, no, we're going to not do that. Now we're going to practice like a different kind of catch. So I want you to throw it high, or I want you to throw it low. Then after that, it turned into, I actually want to play defense now instead of offense. And of course, we have nobody else around. So he's like, you throw it to me and I'll just bat it down. I'm like, okay, this is not helping at all. And then honestly, the last one was, I throw him the ball. He puts the ball down. He grabs a stuffed panda and throws it back and says, okay, we're going to play catch with the panda. And I thought to myself, I feel like I'm having deja vu, because this kind of feels like what we've been going through for the last however many months and years. Now playing catch with a panda. So with that, we have this session set up to talk through the new funds as well as some lessons learned. And the first thing I could think of besides playing catch with a panda was this comment from President Reagan.
I think you all know that I've always felt the 9 most terrifying words in the English language are, I'm from the government and I'm here to help.
I'm sure many of you know exactly what I'm talking about. So with that, we always have to have a disclaimer, right? So the disclaimer, the information is current as of today. In fact, I'm going to say probably yesterday, because who knows what might get released and dated today. Same thing, we might have talked about some things historically, and they might have changed. And I think everyone hopefully knows that, but I would be well aware of it. This is a program that is very difficult. So anything that is kind of an assumption that you've made, always make sure to kind of check back in, make sure that assumption still makes sense. If there is something that deals with legal or state issues, definitely consult with somebody related to those, whether it be an attorney or accounting professional, et cetera. And then, of course, refer to those source documents, web pages, other areas for anything that may have changed since then, kind of what I'm talking about here. So what we are going to cover, we're obviously going to talk about some of the lesson learned from the first reporting window. But I know most of you are like, I know we have to report on the old funds, but I want to know how to get my new money. And so we're going to do that first, because I know it's going to be in the back of your mind, even though it is probably just as, if not more important, to make sure your reporting is correct, so you don't have to pay back any of the money you've already received. We're going to put that at the end, so hang on to that. So we're going to start with new dollars. If you are not aware, and hopefully you are, there's $25.5 billion available through this new round of funding. It is actually 2 distributions. So it is a phase 4 general distribution, and it is an American Rescue Plan, or ARP, we're going to call it, ARP rural distribution. And it's important to know because they are different, but there's going to be one application for both of them. And we're going to kind of talk through what that application looks like and the information that we know today. There's still a bunch of information that we do not yet know. We're hoping more information gets provided, or at some point, like everything else, we're going to have to make some determinations, assumptions, et cetera, as we kind of work through the process. So the application portal, you see the link here. It is on the same platform as the attestations of previous items received, as well as that reporting portal that you're doing with the previous funds. So you first have to obtain a an Optum One or Health One ID, whatever it's called, to kind of get access to everything. But once you're in there, everything is through this one portal. It's important to note that applications are due by October 26th, and that is before midnight on Eastern time. And we do want to point out HRSA, which is the group that administers this program under HHS. They've already done a couple of webinars on this, 3 to looking back. The first one was before it opened. They've done 2 since. There's 2 more coming up. And I actually would encourage anybody to register for those, because if we look back at the reporting webinars that they did, one of the things I noticed was the first 2 that they did were kind of scripted, right? It was the stuff that they wanted to get out there, but they had already put out there. But when they got to number 3 and number 4, that was like the Q&A type sessions. Now, they were still fairly scripted, but there was actually some more new useful information that was included. So those would be the ones that I would encourage. As we look at the different distributions, as I said, there's 2 separate ones. We're going to start and focus on the phase 4 general distribution. So if you have received funds in the past, or even if you haven't, there's been 3 phases preceding this. You kind of assume that since this is called phase 4, who knows? I mean, they could have called it anything they wanted. The eligibility noted here. If you've got funds in the past, you're likely eligible. Now, if you got funds in the past and shut down your operations, that could impact things, because you notice there on the 3rd line, you have to have provided patient care after January 31st, 2020, or you can't permanently cease from providing care. But if you've got funds in the past, you're likely already eligible. Even if you didn't receive funds in the past, if you were previously eligible, you again are likely eligible for this phase. Now, saying that you're eligible and saying that you'll receive funds are 2 different things. So when we look at this, the phase 4 calculation, there is 2 components of this. There's a base payment, and there is what HRSA is calling bonus payments. So they're going to take $17 billion. And again, we keep using this billion. It is crazy that we're tossing out these numbers because a few years ago, that's like not even comprehensible. But we are. So we're talking $17 billion through this phase 4 distribution. 75% of that, or just under 13 billion, is going to be based on your actual operating experience for patient care between the time periods of July 1st, 2020 and March 31st of 2021. And if you're like me, you're thinking, why are we using a 9-month random window that's like crossing over periods? Like, what's going on here? Plus, we've all followed the news. Many of you are still experiencing COVID impacts, and likely your later time period 2021 impacts were way more than they were in 2020, right? Contracted nursing fees are through the roof. A ton of extra, COVID responses are needed to be, have already been incurred. So the reason that it's focusing on this 9 months or these 3 quarters is back in December, the Consolidated Appropriations Act that was passed by Congress, that specifically said the next round of payments needs to focus on these quarters. So HRSA really is required to, because of law, focus on these 3 quarters. And that's where this is all deriving from. I think it's important to know that just to understand kind of the chaos that's happening in the background. So there is also going to be some bonus payments. That's 25% or about 4 billion. Again, we're not talking small numbers. That is going to be specifically based on a provider's billed claims for Medicare, Medicaid, and CHIP in general. I point this out because HRSA already has that data. So this bonus payment is going to be automatically calculated, and we will not know what it looks like until they do that. Now, a few items of note. There will be specific payment adjustments that will be done. And this is consistent with what HRSA did for phase 3. So for new providers, if you have, and what I mean by new providers, if you started operations, in addition, if you did not receive funds in the past, they're going to make some adjustments. So they're going to give you the greater of what is calculated in that base payment calculation, or 2% of your revenues, just like phase 3 was. For others, pharmacies and DME suppliers, you're going to have a very specific cap. Or there's going to be outliers. So they use analytical procedures to identify by provider type what is the mean or median loss that's being experienced by this group, and what does it look like one standard deviation outside? So put back on your like college statistical classes, right? We're talking standard deviations and all kinds of fun mathematical equations that clearly we don't have the answers to. If your application's flagged, that could mean that your payment's either capped or maybe even marked as 0, and there will likely be some follow-up payments. So when it comes to that 75%, what are they looking at? They're going to be looking at operating revenues from patient care and operating expenses from patient care. And it is going to be that 9-month window. And as you can see here, we are also providing 2019 information because that is the baseline. So the expectation is you're looking at Q3 of 2020 as compared to Q3 of 2019. Q4 of 2020 to Q4 of 2019. So kind of like the normal lost revenue type calculations. And by the way, that's a screenshot of the actual application. So those are literally the numbers you will drop in. Now, the definition of operating revenues from patient care, you can see here, pretty generic. Basically, revenue from patient service delivery, okay? 340B program revenue. And I know this is confusing. It says must be excluded, and Ashley's going to touch on it in a minute. Must be excluded contractual adjustments, charity care, and bad debt. I have no idea why they keep doing this. It gives me a headache. I have answered this question literally 500 times. Ashley, I'm
say you're stealing my thunder from later.
And here's your thunder. What do they mean, Ashley?
Yes, please. They are recorded at net. Well, yes, better than their clarification of does not include means exclude, but
I
yes,
agree.
we will talk about the question, clarifying that coming up. So
So to reiterate, we mean net. So it is net patient revenue. You'll notice that third bullet point includes depreciation and interest. I have no idea why that's on there. I can only assume that's an error. When we get to the next step, you'll see that there's operating expenses. That's where interest and depreciation shows up. That kind of makes sense. Here's the piece to pay attention to, however. When you look at operating expenses from patient care, what you see here is directly from the instructions, the first piece of this with the red highlight or with the red header. You'll notice it's salaries, benefits, contracted physician supplies. There's a lot of other expenses you incur that is not in any of these categories. So I pulled an FAQ that was released at the same time this was, and you can see it below. And it basically says that those overhead costs that basically support those can or may be included as part of operating expenses from patient care. And I think that's an important distinction. And also note those words. I know we look very specifically at words, and sometimes too much so, and we dig into things that's not even intended. But it does state applicants may include those costs. So once you do the calculations, and even those calculations are still unknown, it is what we're expecting is basically kind of take your net margin from 2019 compared to your net margin from 2020 and 21 from patient-derived services, and the differences between those is expected to be this loss. Once you come up with that, however, on top of the fact that we actually don't know what that calculation looks like, they are going to break these base payments into small, medium, and large categories. And this is going to be based on revenues. We don't know what those small, medium, and large categories will be until all the applications are submitted. The small and medium categories will actually receive a disproportionately higher share of their losses than the larger category. So if you're a smaller organization, you're going to get more than a larger organization in terms of a pro rata amount of your loss. Also note that no provider will receive more than 100% of that loss as part of this base component. So you calculate your base component, which we can't do, add your bonus component, which we can't calculate, and you get your total payment from phase 4. So now we're going to go to the ARP rural distribution. Eligibility, same as phase 4, but there's some more particular inclusions that are required. So you either must be a rural health clinic or an actual provider in a rural market, like a critical access hospital, or, and this distinction is very important, this rural distribution does not mean you have to be a provider in a rural market. It is for providers that treat beneficiaries of a rural market. So if you build claims to Medicare, Medicaid, or CHIP for a rural beneficiary, then you will be eligible to receive a component of this rural distribution. And that rural definition noted there is from HHS's Federal Office of Rural Health Policy definition. You're not going to have to figure out whether or not you are rural, however, which is a very nice component of this. So how they're going to calculate it first, based on the claims that you submitted for your own specific organization, for beneficiaries of Medicare, Medicaid, or CHIP individuals in a rural market between January 1st, 2019 and September 30th, 2020, they're going to take all of those claim beneficiaries. They are going to, we're going to call them right size it, or they're going to price all of the activity so it is consistent. So they are planning to use Medicare rates across the board, and then they're going to do an automatic calculation that we don't know what will look like. So that's important to understand that as much as we want to try to estimate and calculate this, I'm not sure we'll be able to. They do note, however, if you have at least one claim to a rural beneficiary, then you will receive a minimum payment. So that is a very important distinction. Now, what do you need to do to access these funds? This is actually one of the best things I have ever seen them do. On the application in the portal, that same application where you are entering revenues and expenses, you will literally just select yes. If you select yes and you do not have any rural beneficiaries, you do not get penalized. So they note that.
Yep, and that's what I was just going to say, Tyler, is, just to really reiterate this for everyone, is there any reason you can see that a provider should not select yes here?
No. Yes. If
Agreed.
you miss this box, and I know most of the rural providers that are on here are thinking, well, this is going to reduce the pot and the dollars distributed, and I absolutely agree. The pot of money, the scale of the providers, there's going to be a lot more than you were probably expecting. At the same time, there are a lot of providers that maybe are in suburban areas or that have a substantial portion of their operations due to clinic or other operations out in rural markets. So it is kind of getting the payments to the groups that are providing that rural care in some capacity. All right, so there is a one-page document that is on the HHS website. It looks like this. These are your steps. So I think this one's kind of nice. I laid it out here. I would grab a copy for your own personal information, but it just flows through the basic steps that we'll kind of cover here pretty quickly. So the first step is you will log in with your Optum One Health ID. And when you get in, you should see this screen. If you do not, and if the first screen that you see is a check mark under Validate TIN and a check mark under Revenue and Tax Information and the Attest to Payments and Terms open, it likely means you got a phase 3 payment and you never attested to it. HHS is going to require that you actually attest to that payment first, and then you will be brought to this screen. So once you're on this screen, step 1, the only step you're allowed to do here is to validate your tax identification number or multiple tax identification numbers. You see here most of the information that's going to be needed and submitted in order to validate that tax identification number. This process has said to take anywhere between 1 to 2 business days. Shorter if you've gone through this before and had your TIN validated. It may take longer or require more steps in order to validate it if you're brand new. No matter what, complete that validation process by October 26th, or at least have that in process. Again, it may take a while. As we saw for phase 3, they had some issues with validating TIN numbers for phase 3, and they allowed them to kind of go in after that due date and refill out, or actually kind of fill out to the first time the application because of that delay. So once validated, you'll get to the actual application. That is the middle step. You'll see the Get Started. Another thing important to note, once you complete the application and actually submit it, you will still see this same page until the application has been approved and the payment has been released. So you will go through the application, you'll get it all done, you'll submit it, and you'll see this same screen. I have no idea why they won't create a new screen that says in process, something other than get started. Instead, they're communicating this issue. It blows my mind that we know there's a problem, we're just not gonna fix it. Anyways, know that because it has been an issue. Once it's submitted and you know you've submitted it, you might still see this, and that's okay. So the actual application, here's what you will see. These are screenshots of the actual application. This is page 1. So most of the first piece will be automatically populated as you validated your tax identification number. The next few steps for your contact information will have to get added. And then there's the revenue stage. So this first boxes 10 through 12.1 are submitting your actual revenues. This is revenues for your fiscal year. And this is going to determine whether or not you need to submit any additional information as we get to page 2. So this is not in any way calculating any amounts you're receiving. This is more giving them a baseline and having some kind of audit of the numbers back to either a tax return or an audit or some other documentation. Then we get to page 2. So the first piece of page 2 was those charts I showed earlier with the 12 different boxes of operating expenses and operating revenues. Below that are these areas. So while you are just dropping in 12 numbers, they do want to have supporting documentation for all those numbers that you add in. So they would expect some kind of internal financial statement, internal schedules, whatever they may be. And those are boxes 19 and 20. You will also see there's boxes 16, 17, and 18. And again, those may be required depending on how you submit the first part of your application. So if you have multiple tax identification numbers, you may have to submit number 18 because you have a complex organizational structure. If you have a lot of non-patient revenue, you may have to require, or you may have to submit 16 or 17 to show some of these calculations and adjustments. Once that's done and you actually receive the payment, so the payments, what HHS has come out to say is the ARP rural payment is expected to be released sometime mid-November, but before Thanksgiving. The phase 4 payment is expected to be released sometime in December, but that will likely trickle out into January and possibly February of the next year as they work through some of those more complex calculations. Once you receive it, just like everything else, you're going to have to attest to those payments. And when you do, there are specific new terms and conditions. Many of them will look the same, just as you had before, but we do want to point out some of these new ones. So the first one, if you receive funds in excess of $10,000, you are required to notify HHS of a merger with or acquisition of another healthcare provider during that period. So note that because that is new for this one. The other one that's worth noting, and I know this was a question as we got through the reporting, how do we tell where we put our dollars if it was interest bearing or not, and we're required to do that? Since it wasn't previously required, they added this in here. Any advance payments, meaning amounts that you get that you haven't yet supported, are required to be deposited into an interest-bearing account. And then any of that interest earned is expected to be used following these same terms and conditions. For the ARP rural payment only, here's another important one. The payments received by that specific provider needs to stay with that specific provider tax identification number. So under the previous distributions, we were allowed to have general and targeted transfers, right? You could transfer through a parent to other subsidiaries. You cannot do that here. It has to stay with the tax identification number that received those funds. That's the bad side. Here's the good side. They received some new they distributed some new FAQs specific to ARP. And I'll touch on that on the next slide. So the actual use of funds for everything, phase 4, ARP, both of them together, even though they focused on the 9-month window, you will actually have all the way back to the beginning of the pandemic, or January 1st of 2020, through at least December 31st of 22 to spend those funds. And I say at least through 22 because they haven't said if you get the funds in January of 22 or February of 22, if you potentially have even a further extended period, you may. That hasn't been released yet. So you'll have at least through December 31st, 2022. So you have well over a year if you haven't supported the dollars to be able to spend them or to support them through lost revenues. So one of the questions I'm often asked is, I'm struggling, I'm working through these first rounds of funds and we're, scraping to look for what we've incurred. Should I even apply here? Like, I know I'll probably get something, but I don't know if I can support it. I've said yes. And the reason is you have well over a year to figure out what to do. And as we've seen this year with the Delta strain, a lot of things can happen that we are not aware of in 2022. Contract nursing costs, from what I've heard, have not changed. The labor market has not changed. So you're likely all experiencing increased costs. And you probably already had increased costs after that first period of availability from your first round of funds. So you may have more costs than you even realize. As for eligible uses, same as it was before. Prevent, prepare for, respond to coronavirus, and you can't use them to reimburse expenses that are reimbursed from another source or another source was obligated to reimburse. So as I kind of gave you a hint to earlier, the ARP rural payments, there is a new FAQ. You'll notice in here, it is much more broad than anything else. The first section is noting that lost revenues can include things like decreases in tax revenue support or grant funding if those items were really supporting your patient care revenue. In addition, in the second paragraph, they bring back our favorite words, right, Ashley? To maintain healthcare delivery capacity. They came.
It was very exciting.
They
I mean,
went.
maybe other people don't get quite as excited by these things, but we
They
have
back.
to take the victories when we get them.
I agree. So yes, that broadens the ability to use these funds very much. So with that, I know we covered a lot. I'm sure there's plenty of questions. I know Ashley has probably been typing away to get some of them answered. I'll switch over and try to do the same. But we are now going to get into the reporting side and kind of talk through, rather than the overview of the reporting, we do have previous sessions we've done over this. They are available on the Eide Bailey YouTube channel. So if you literally Google Eide Bailey YouTube, you will find them all. There's other videos out there too. I just want to plug for employee retention credits, for PPP programs, all kinds of stuff for educational materials. And again, a lot of the historical sessions that we've had. So we're not going to cover that. We're more covering, here are the lessons learned. Here are the questions that Ashley and I get on a daily basis. I'll stop talking now, Ashley. You're up.
Yeah, so, as you were talking, I was thinking so why is it that Tyler gets to cover the fun part again with all of the new funds? And then I get to cover the not fun part of all of the work that everyone gets to do to substantiate all those funds. But
so for what
that is okay.
As we plan through these every single time, and Ashley jokes about this, we go back and forth on who's going to take what. And my comment is always, I don't care, just pick something and I'll take the rest. And so, Ashley, I think you picked this.
I don't think I did, but but hey, like I said, as Tyler mentioned, some of these slides and things, if you've been on webinars of ours in the past, you might see some repeats, but really what we do want to focus on are what are those items out there that we are just hearing a lot of questions on, that there seems to be some confusion. So just want to start out first off with the screenshot of the portal. And so this is what it looks like when you first go out there to get logged in. So would really encourage everybody, if you have not done so yet, to at least go out there, get registered, and get started with the process. So another really key point, and this is just a snapshot from that initial portal screen, is there are a number of resources out there that are really helpful as you work through the reporting process. And so on the left there, you'll see the reporting and auditing requirements, and the frequently asked questions are ones that we've boxed as really being the most really relevant and really helpful. Those are really going to be where you can see some of these frequently asked questions that we are going to talk about today, but also tons of other information, guidance, those things. As we've mentioned, it changes a lot. So something to keep an eye out for and be looking at those things. But then over on the right-hand side, you'll see there the reporting user guide. So this is a roughly 70-some page guide, which seems a bit overwhelming right away. But this will walk you step by step through the reporting portal process. And so it is actually very helpful if you're working through those screens and you think, okay, what in the world are they looking for here? Or what do I need to do? If you go through that guide, it will walk you through that step by step. And then the other piece that we've really found to be useful on the portal resources are the portal worksheets. And what these are is essentially just Excel-based worksheets that show the tables that are directly within the reporting portal. And why this is nice is that you can take those tables and compile your information together ahead of time and have it all ready to go when you go to do that portal submission, versus trying to log into the portal, click through screens, trying to enter things. It just really makes it easier. So a lot of information out here, but would really encourage you to take a look at the items that we have identified here. So when to report, always need to touch on this because it can certainly be confusing, but something that is just very, very important to be aware of. And so HHS changed this back when they did their July update to where essentially your reporting, June update was when this came out, but essentially your reporting is based on when you received the specific funds. And so then same thing, the deadline to use the funds is also based on when you receive them, etc. And so what I would really encourage everyone to do here is take a look, get a list of what are the different payments you received, when did you receive them, and really take a look and identify not only what is our deadline to use these funds, but when do we need to report? Because it can be very confusing. You might have a reporting period. You might be in this first reporting period now, and then you might skip a reporting period and then have to report again a year from now. And so just encourage you to take a look at that, get those dates on your calendar so that you make sure that you're meeting those timelines.
And as you can see on that schedule, it only goes through December 31st. That's where I said, if payments are received in 2020, we still have to see what that potentially looks like.
Yes, as things continue to move forward, might have some additional changes on that as well. So, and should also mention the covered period for all of these does begin January 1st of 2020. So what that means is that essentially your period to utilize the funds goes back to technically January 1st of 2020, but really when you started incurring on the expense side, any expenses to prevent, prepare for, respond to coronavirus, and the revenue again, January 1st of 2020. But we'll talk a bit about that as we move forward here as well. So after we just talked about the deadlines, I thought it'd be important to touch on the 60-day grace period for reporting period 1. So I'm sure as many of you have seen already, and we were very thankful to see is that HHS did come out and apply a 60-day grace period for this first round of reporting. Basically, the reasoning there just being with everything that was going on, including the Delta variant, some of the surges, but they also referenced just the natural disasters occurring within the country as well. And how they phrased this, it was a bit interesting, as they said, well, you will still be out of compliance if you don't submit your report by September 30th, but that there will be no recoupment or any other enforcement actions as long as you file within that 60-day grace period. So the new date to keep in mind if you have not reported yet for reporting period 1 is November 30th of 2021. So very, very important. Keep that date in mind as the date that you need to make sure that things are filed by. So if you do have any unused funds, those need to be returned no later than 30 days after the end of the grace period. So key date there, December 30th, 2021, if you have funds that you need to return. Another very, very important point, this grace period is only for reporting period 1. And that's why that table on the previous slide, if you take anything from this presentation today, that table is very, very important. Make sure you are looking at those dates and that you are tracking those, because this is the one and only grace period. And so very important to make sure that you're meeting those filing timelines moving forward. And as part of this process, the piece that we were really hoping for is that they would extend out the period of availability for this first round. But unfortunately, no change in the period of availability for reporting period 1. Still June 30th of 2021 was the last date that those funds could be used. So another question that we hear frequently is when you're moving through the reporting portal, you will be asked some questions regarding subsidiaries. And so one of the questions within there is that it asks you if there were any targeted distribution payments that were transferred to or by a parent entity. And so a lot of confusion on this one, but really your response here should only be yes if you received a targeted distribution payment that you transferred to another entity that has a separate TIN. So in other words, if you have an entity where you are a hospital and you also have a nursing home, you fall under one TIN number, you're sharing funds back and forth, that is you would answer no here. So this is only if you are truly transferring a targeted distribution payment between TINs. So definitely one that we see pretty commonly, that people are more inclined to answer yes here when it's really not that true transfer of a targeted distribution payment. And so if you do have a true transfer, did include it here as well, that you do need to note what the dollar amount is of that amount that was transferred. Another common question that we get is this single audit thing. What is this and what do I need to check? And so this is a bit interesting. So for fiscal years 2019 and 2020, what this refers to, I guess, overall is a single audit is an audit that you need to have if you have federal expenditures exceeding $750,000 in any given year. And so essentially, for a lot of providers out there, this does not include Medicare. So for a lot of providers out there, this is typically not applicable. But for fiscal years 2019 and 2020, unless you had other federal funds that you received and expended, there is no way that you could have had provider relief funds subject to this single audit. So for 19 and 20, you may say that you were subject to a single audit, but you will not say that provider relief funds are included. That's why I say 19 and 20 is quite interesting. For 2021, going to be a lot of providers that may fall into this if you received large sums of money. I would just really encourage you here, if you did receive greater than $750,000, just work very closely with your auditors or with your CPA firm to determine if you are eligible for that single audit. And for the most part, the provider relief fund payments will be included, but again, in some circumstances, they may not. So certainly something to work very closely with your audit firm on. If you've received under $750,000, you can just leave it blank. But yes, definitely a very, very confusing point. And as I said, a good one to work with your auditors on, because there's not necessarily a black and white answer on some of this. So for other assistance received, wanted to point this table out because we get a lot of questions on, well, number one, what else should be included in here? And then also, what does this do? And what else do we need to do within the reporting portal? And so the other assistance received, this is just any true coronavirus related assistance that you received outside of these provider relief funds. So do not put your provider relief fund payments in this table. Since that's what you're reporting on, they should not be considered other assistance. Other thing to keep in mind with other assistance is that you do not include any of your other assistance received as revenue when you are doing any of the revenue calculations. That was one of the positives. We were hoping it would not be included. They did clarify that it is not included. So just keep that in mind. Do not include that. The other question that we hear a lot on other assistance, and you'll see as we move forward here on the expense side, is we get questions regarding, okay, well, I had a PPP loan I'm reporting in other assistance. Do I now need to report my PPP expenses as I move forward in the portal? And the answer is no. Any PPP expenditures, grant expenditures, anything that you've spent with this other assistance received, do not include that in any of your provider relief fund reporting. Essentially, the provider relief fund reporting is truly just looking for those true expenses that you are claiming under the provider relief fund. So long story short, they want this information, but beyond this table, it does not impact any of your future calculations. So here's the expense table. Just a couple of things that I wanted to clarify here. that we get a lot of questions on. So as I mentioned when talking on the previous slide, when you're reporting your expenses, these are going to be just your true expenses that are to prevent, prepare for, and respond to coronavirus that essentially you are claiming against your provider relief fund payments. So again, to reiterate, do not include PPP expenses, do not include just your normal operating expenses. I've seen some providers just try to put all of their expenses in here. This is truly your expenses to prevent, prepare for, and respond to coronavirus. And as Tyler mentioned, that these should not be either reimbursed by another source or be something that another source is obligated to reimburse. So a good example there is like you're a critical access hospital and you have expenses where a portion is going to be reimbursed by Medicare. They should be included at net here, essentially just the true unreimbursed items that you are claiming under the provider relief fund. Another common question with this table is, so you can see in this example, they have total provider relief fund payments that they're reporting on of $976,706. And so I've had providers ask the question, well, I actually have $1 million of expenses, but it won't let me put all of the expenses in. So you can only put up to, in this example, the $976,706. It will not let you exceed that. But then there is another table that comes after this that is other unreimbursed expenses. So if you have those true expenses to prevent, prepare for, respond to coronavirus, but they exceed your funds, you can still report them, just report them in the next table, not within this table.
Yeah, and what I've seen many providers do is basically kind of the last item that you include plug to make it work. And you'll know whether or not it works if you have the exact amount of expenses when you get to the revenue section. So when you get to lost revenues, you see a screen that is just two numbers, you likely did it right. If you see a screen asking which option you should choose to report your lost revenues, you probably need to go back and adjust the expenses reported.
Yes, absolutely, Tyler. Great point. That, I mean, and this goes down to pennies. So you want to make sure that the number is exact that matches it, because as Tyler mentioned, if you are short, it will then ask you to report lost revenue. So just something to watch, make sure that that table equals, or if you don't have enough expenses and need to report lost revenues as well, then that's okay. But something to definitely watch. So just at a high level, because we get a lot of questions out there about, okay, what expenses are subject to reimbursement? And so whether, I guess it's a good thing, but can be confusing, the allowable expenses under the provider relief fund are actually quite broad. And so as we've mentioned a few times here, that it really is those expenses that were used to prevent, prepare for, and respond to coronavirus. And so you'll see, if you look at that table on the previous page, a number of different categories that are laid out there. Those are really just, again, examples of what you could potentially claim. But really just to keep in mind, anything that you had that was to prevent, prepare for, and respond to coronavirus. The key being, again, not reimbursed by another source, or that another source was obligated to reimburse. One thing that was issued recently too was a new fact sheet regarding personnel costs. And this was great because there was some information out there, but it wasn't quite as clear. And a question that we get commonly is, okay, can I do a retention bonus, or can we provide incentive pay? Am I able to claim that under the provider relief fund? And so they did release this fact sheet, clarifying that again, these types of payments are potentially allowable under the provider relief fund, but just again, keep that general premise in mind of that they are to prevent, prepare for, and respond to coronavirus. So really what we would encourage you there, if you are planning to do a retention bonus or something of that nature, just to have it documented, really how does it fall within that realm of prevent, prepare for, and respond to coronavirus. So a couple of questions regarding purchases, more so on the capital side, and also related to equipment. So one thing here that they clarified back in early July was a lot of providers had the question of, okay, well, I've purchased assets, or I've attempted to purchase assets, but just given the nature of everything that's happening out there, items are back ordered. We're not receiving them timely. If I've paid for this and I've purchased this, essentially, can I still claim this under the Provider Relief Fund? And so the answer is actually yes. Well, here it's no, you don't have to be in receipt of the purchases. But essentially, so they are saying if you do have true items that you've back ordered, that you've purchased that you just have not received, that you can claim those under the Provider Relief Fund if it's just an issue with getting them. On the capital side, they did make a clarification, which this was one of those that we saw and it ruined our day a little bit. But essentially the question, well, the original question that was out there, this is from a while back, is that HHS had clarified, okay, if providers are doing capital projects, can they claim the entire cost of the capital project as an eligible expense, or is it limited only to depreciation? So the positive of this was that they said, okay, if it's to prevent, prepare for, respond to coronavirus, yes, you can expense all of it. But then they added, unfortunately, the little piece at the bottom, this was a recent addition, where they said you can do that, but in order for the project cost to be expensed, the project must be fully completed by the end of the period of availability associated with the payment that you received. So this was, like I said, one of those that we were definitely not happy to see, because I know a number of providers out there have construction projects in the works. And so this one was tough, but they did clarify that, yes, if you have a project, the project does need to be completed. Seems to be counterintuitive to the question previously about ordering equipment and whether you receive it, but not sure what the thought process was there. But unfortunately, that is the current guidance. So just want to touch briefly on lost revenues and talk through a few key points and things that we're seeing here. So just very high level, wanted to do a quick overview reminder for everybody of what are the three options for calculating lost revenue. First one, and the one that we see most commonly and encourage everyone to at least consider first, is a comparison of the 2019 revenue to the actual revenue. And so this ends up being 2019 each quarter to not only 2020, each quarter in 2020, but also the first 2 quarters of 2021 for this first reporting period. There is also a comparison to the budgeted revenue. Key here, and we'll talk about in a few slides, is that if you are doing a comparison to budget, that the budget must be approved prior to March 27th of 2020. And that's another one of those, it feels like that's such an oddly specific date. That was actually written within the legislation, which is why there is this point about it needing to be prior to March 27th of 2020. And then there's also a third option where you can use an alternate reasonable methodology. And we'll talk a bit about that as we move forward. So this is the question where I yelled at Tyler earlier and said he was stealing my thunder. Initially, when the Provider Relief Fund reporting guidance came out, there was a lot of confusion when they were talking about what makes up patient care related revenue. And so they were saying it excludes investment income and these other things. And then they also said it excludes contractual adjustments. And all of us accountants and finance people said, what? So you exclude the contractuals? Do you offset the contract? Like, what does that mean? They then said, well, no, exclude means does not include. And we said, well, that doesn't help. Okay. Finally issued this question where they did clarify that patient care related revenue should be reported net of adjustments. So they did clarify that on the reporting side. We're very happy about that. Unfortunately, it still made its way back into the phase 4 application, as Tyler mentioned, but we are comfortable because of this clarification that it is truly net revenue that they are looking at. Also just included a couple of questions here regarding the lost revenue option 1. And so as I mentioned, when you're doing that calculation, It's actually looking at the lost revenues on a quarterly basis. And so this was a change back in July. So you might remember, you know, if you were looking at this a year ago, where there was discussion of looking at your annual revenue. And so that is no longer the case. It is quarterly. And so essentially how it works is that the losses are calculated on a quarterly basis. And if you have a loss in that quarter, that's part of your loss. If you actually had an increase in revenue for a quarter, that does not offset or count against you. And so the reason why I bring this up is, and why when I was talking about the lost revenue initially, I said to consider that option one and look at your comparison to actual first. Because I've talked to a number of providers as they're working through lost revenue, and they say, we had a good 2020. Our revenue was up, we had a good 2020, this won't work. But oftentimes when you start looking at things on a quarterly basis, you perhaps had a large loss in revenue in the second quarter of 2020. And maybe things came up in the third and fourth quarter. So that's why I say don't count it out, you know, at least look and see where you're at, because when you do this quarterly calculation, it certainly has helped a lot of providers that way. So option two, and as I mentioned briefly already, they did come out with a clarification on what do you do if you essentially, you have the budget, but as we know, there are issues when you're looking at a full covered period where most providers did not have a budget approved prior to March 27th of 2020 that went all the way through July 31st of 2021. And so unfortunately, they came out with a clarification, maybe not super helpful for most, but they did say that reporting entities can use the budget. But again, it needs to cover the full period of availability and be approved prior to that March 27th of 2020. So if you have a budget, I know I did actually talk to one provider a couple of weeks ago that says, hey, we did a 3-year budget. And I said, great. But if you have a budget that was approved prior and covers that your entire period of availability you're reporting on, great. Otherwise, you would not be eligible to use this option and then would need to look at doing potentially an alternate methodology if you'd like to do a budget comparison. And option three, so the alternate methodology. And so really what I just wanted to touch on here is this is where you can take a look and come up with really what is a calculation that makes sense for us, because sometimes there are extenuating circumstances where a comparison to actual just doesn't make sense, or as I noted when we were talking about the budget, if hey, we just don't have an approved budget for a long enough period. Key here that I wanted to point out is that there is a narrative document that you need to submit along with the calculation. And as part of that narrative, you need to explain why the methodology is reasonable. And then you also need to add a description explaining why the lost revenues were attributable to coronavirus as opposed to another source. So this is really important as you're working through. This is your way of justifying why you're doing something different outside of those first two options. So please, if you're going down this road, take some time to think through it and really make sure that you are justifying within your narrative why this makes sense. And reason being is the question that's out there is they said, okay, how do we know if HRSA determines that our revenue estimation is reasonable? And so you can see here right in the first sentence that it says that essentially HRSA will notify an entity if their proposed methodology is not reasonable, including if it does not demonstrate with a reasonable certainty that claimed lost revenues were caused by coronavirus. So they are going to look at that piece and they are going to look and see that your narrative does explain that. But essentially, if they do or they determine that your methodology is not reasonable, they will give you 30 days to then go back and resubmit your report, either using the option 1 comparison to actual or option 2 comparison to budget. Okay. And I know we're running up on time here, so just wanted to briefly touch on this piece, essentially within the lost revenues. Common question that we get is, do I have to report expenses or can I just report lost revenues? The answer is yes. If you have enough lost revenues, you do not need to report expenses. You can enter 0 for all of those. Another question I know that was out there, and it was in the Q&A as well, is, okay, if I have more lost revenue for this period, can that lost revenue be carried forward to future periods that are being reported on? The answer to that is yes. So if you're reporting now and you have additional lost revenue and you have other payments out there, or potentially you receive some phase 4 funding, that's a good thing. Any of that lost revenue will be carried forward and can be used in those periods as well. Personnel, patient, facility metrics. I just put this here because the most common question is, do I actually have to do this? I didn't report expenses. Unfortunately, yes. Anybody that is filling out the reporting, you do need to complete this regardless of whether you are claiming expenses or lost revenue. Key thing here, this is not dollar amounts, this is numbers. And again, this is where that reporting portal guide is very handy if you do have questions on the specifics of what needs to be included here. So just to wrap things up, because I know we are at our time, actually a minute over, but essentially if you've gone through the reporting process and determined that you cannot support all of the funds, what do you do? First is make sure the information that you have in the portal is accurate, because something could get entered strange or you miss something. So make sure that it aligns with what you're thinking. If you still aren't able to support all the funds, take a look. Are there additional expenses you can pick up? Is there a different lost revenue approach that you can apply? And then last but not least, if you're just not sure, reach out to the provider support line and talk to them about some specific expenses, because we are actually hearing from a number of providers that they've reached out to the hotline and specifically on some general and administrative type expenses. And they are getting some answers that some things are allowable that you maybe would not think of. And so what we do recommend there is, if you are talking to the hotline, be very specific on your questions and exactly what you're asking about. Document who you talked to and when, and specifically what was discussed. And then very last comment is just, do you get any type of notification from HRSA saying that this has been accepted and you are good to go? Unfortunately not. I'll steal Tyler's line. Think of it as a tax return where you file, and if you don't hear anything, great. But unfortunately, no clear-cut stamp of approval, like for example, with a PPP loan.
You stole one, I stole one, so we're even.
I know. Okay, well, we are 2 minutes over.
And we have had a ton of questions, and I still see there's some open. So for the open ones, we will try to respond. We'll get a printout of the questions. Hopefully you can see some of the answered ones out there. If you do have any questions or need assistance as you work through these processes, feel free to email the Provider Relief Fund email address at PRF, very simple, at eidebailey.com, or you have my and Ashley's contact information, so reach out to us as well. But once again, PRF at eidebailey.com, and hopefully we can get you some assistance that you need. And I'll do a final plug for the YouTube videos. This will be posted out there when done, so if you went through really quickly and you wanted to readdress what we talked about, take a look at that. Otherwise, we appreciate your time. Ashley?
I got nothing else. Awesome. You covered it.
Let's go play some Panda Catch.
I like it. Let's do it.
All right. Thanks everyone.